guys, hi traders, welcome to another live video on YouTube. Today we're going to have a lovely webinar planned for you guys. We're going to be taking a look at a very nice strategy. This is a dual stochastic strategy that will hopefully help you guys be a lot more successful with your trading. So I really hope you enjoy the video we have coming up. There are going to be a live pop. I'll be showing some live examples, maybe even getting a trade or two in if we're lucky. And there is a 10-15 minute presentation first just to show what are the important things to watch out for this setup. The chat is available on the side for everyone watching live, so send over to me any questions you have, any thing you don't understand. And of course, first and foremost, let me know where you're watching from. You can see Mozambique is the first country I see here on the chat writing. This is Nestor. Welcome Nestor to the live watching of this. Guys, very importantly, we are going to be having lots and lots of webinars coming up. We do need your feedback for what you want us to be showing you as well. So on the live, watching live, giving your feedback is the option as well. So there will be a poll at some points asking you what is your favorite indicator to trade, how much experience you have, and importantly, what do you want to see next. So please take a few seconds to give us your feedback there on the live polls so we can prepare what you guys want to see. I am here ready to it. And very importantly as well, since we are going to be having lots of webinars coming up, you can always receive a notification for these webinars as well. So very good thing always to do is to like the video if you find it useful, subscribe to the channel to be notified for all other videos we have, and by clicking the notification bell as well, you'll be notified for the upcoming videos so you can watch them live as well. The next one is going to be in 2 weeks on a Thursday, and that is more or less going to be the plan. Hopefully every second Thursday we're going to be having a live webinar available for you, normally around the same time as well. So wherever you are in the world, this time, every second Thursday for now, we should be having a live video for you guys. Right, I'm seeing countries coming in here. I see India, Manish, welcome. I see Ukraine, Alexander, a very faithful viewer, always watching. Very happy to have you again, Alexander. And then Shabel from Lebanon, welcome, sir. I think someone wrote earlier in the chat as well that they're a newbie to our videos. So welcome to you who are watching this for the first time. And I hope you find this stuff really useful for your trading. Okay, not going to waste any more time. I'm going to jump straight in and start presenting our webinar to you guys. This is the strategy of the day today, and it is a dual stochastic indicator strategy setup. A very good one for short-term binary trading. This is, I think, what the majority of traders like to do, binary trading. So this is what we're giving you guys, some nice binary trading strategies. Let me know in the chat if there's any problem with the audio or the visual. I think everything should be right. My shirt is blue, so if you're seeing it in any other color than blue, means there is something wrong with the visual. If you hear me speaking English, means your audio is working. If you hear me speaking any other language other than English, means that something is wrong with the audio. Now that's hopefully a problem. Hopefully a problem we don't have. Right, so let's go. Starting up. First thing first, first slide we're going to look at is what this indicator setup is supposed to do for us. So the aim, the goal, the target for this setup is to enter the trend with a with a better possibility to a better price. We're looking for a better price to enter our trade to hopefully get into a nice profit. The method, we wait for the pullbacks, enter when the pullbacks have finished. Simple and easy to understand what the plan is, what the strategy is. And then the indicators we're going to be using is a gamma and two stochastic indicators, two stochastic oscillators with different settings on the stochastics. We will be taking a nice little look at them as we go forward. Sound and video okay. Thank you for that feedback. I'm happy to hear that. And now let's move on to the setup. The gamma is on default, so we're not going to set anything. We just need to find it in our indicators, apply it, and leave it as exactly it is. No changes required. This is what it will look like once we have applied the gamma. It's a singular line that is moving underneath or above the market price, the asset price. So gamma is considered one of the most reliable moving average options to use for identifying the prevailing trend. In simple terms, this will show us where the market is heading. If the market is above the gamma, then the market is trending in a bullish direction, so it's trending upwards, as we can see on this part here, where the market is above the gamma is pointing up, so this is showing a bullish trend. The opposite is, of course, the opposite. When the market is trending below the gamma, as we see down here, for example, this is a signal that the market is in a bullish bias, so it's more prevailing in the downward side. Very, very easy, simple what the gamma does, but effective. Very nice and effective. Moving along, we're going to apply 2 stochastic oscillators with the settings below. This is important. We are going to make changes to these indicators here, to the stochastics, and we're going to change it from the standard setting. We're going to go to period K at 21 on the first one, smoothing 6, and period D 6. The other one is going to be period K will be 4, then smoothing will be 2, period D will be 2. This is something that is important to do. Once we do this, next thing we're going to go ahead and do is change the colors of the K line and the D line on both of them, making it much more easy on the eye and easier to follow. So we can just make the 2 on the long stochastic, we're going to make it purple, and on the short stochastic, we're going to make them yellow. Easy and simple. Okay. Oh, Jesus Love. Okay, that's a very interesting name. Right, guys, let me just not get distracted here. Let's keep on going. This is what it's going to look like once you have them implemented. There's a yellow stochastic with 2 lines, 2 yellow lines, and there's the purple one, of course, with 2 purple lines. The yellow one will be showing us the representation of the small movements within the trend. So this is showing us pullbacks and retracements back into the trend. So it's the small movements we're going to be seeing with this one. The purple one, obviously it's set on a longer frame, so this one is measuring more candles, giving us a longer calculation. So this long one will represent the overall larger trend, very similar to what the gamma is doing. So we have, this is why it's purple as well, because gamma, we can make that purple, and we have 2 indicators more or less showing us the overall long trend, and we have the small yellow one to show us the little pullbacks and breakouts in the smaller trend. Hopefully this is making sense to all you guys. Stochastic oscillator is it shows the ratio between the current price and the range of maximum and minimum value for a specific period of time. So it measures the time, as we said before. This one is, we set it up on 2166. The other one, as you can see, is showing here as well. So 422, 2166, long one, short one. Easy to do. We'll do that on the live account in a few moments as well to make it even clearer. This is what it will look like. Let's take a look now at how we can trade in the lower direction. First thing and important to see is what the gamma is showing us here. As we are below the gamma, this means that the potential lower entry. So as we can see in this here, there's the gamma line above, market is underneath it. So this is hinting to us that the market should be dropping in value. And as we see here, it does do that. There's a bit of a pullback here, then it drops further down. So we are more or less hinting that we're going to be trading in the downside. Here that it switched above and it's above the gamma, this is now hinting the opposite, that the market is now reversed into an uptrend, and we should be looking for entries in an uptrend. Easy stuff. I don't think there's anything complicated with this so far. Okay, when the purple stochastic hits oversold, the market momentum is indicated to be a strong bearish. So this is a long period as well, right? So the long one is showing that it's getting oversold. So this, of course, moves very nicely with the gamma being underneath as well, so market being underneath the gamma. So we can see here it's a downtrend, and we can see the overall trend is getting very much oversold. So the price is tanking very much to the bottom side. Inevitably is going to lift up off the bottom and make its way to the top, as it does behind my photo here. But yeah, the idea is that we want to be looking to understand if it is overbought or oversold. In this example, when it is on the red line on the bottom here, on the 20 line, it is considered oversold. Important for this moment. Then, when the yellow stochastic hits overbought, the pullback from the main trend has just finished. This is the key part here, the pullback. This is what we're looking for. Here, for example, is a perfect example of it. The main trend, as we can see with the gamma, is a downtrend. Market is underneath the gamma. That's part 1, signal 1. The first stochastic, the long one, is coming down towards the bottom, so it is oversold. That's the signal number 2. But then we have a small little pullback on the small frames. In this one here, this is what we're waiting for. This is a pullback. As we can see here, the market as well, it's climbing up. It reached a peak. It's not going to climb anymore. The 2 lines cross over each other, pointing downwards, and that is the signal. That's the go signal along this candle here. We're supposed to enter our trade upon this moment. Once we see the little cross there, this one is at the bottom, this one's close to the top and crossing. That's our entry point. Very easy, very simple. Just wait for the pullback to finish. That's what we're getting. Another example of it here, another one there, and they all have the identical thing which I mentioned. The long one is on the bottom, the short one is on the top here. That's what we're looking for, a crossover of the short at the top. We'll get into more details in a few seconds. I want to take things slow, step by step. So far I hope everyone understands what we're looking for, right? Beautiful. Let's move it along to the next slide. This could indicate a potential to trade lower for 2 candlesticks of expiration time. So I'm doing 1 minute on this example here. Each candle represents 1 minute, so I can do a trade for 2 candles. There, for example, I would enter my trade on the previous as soon as I see the cross along this candle, as we mentioned before. So these 2 candles is the ones that will be active on my trade. If I open my trade along this candle for 2 candles, that's basically 1 minute, 1.5 to 2 minute trade. Best would be something between 1.5 to 2 minute trade, because we always have the 30 seconds after you enter the trade, once you execute the trade for the expiry of it. So that's it, that's 2 candles. So if you entered your trade along this candle here, it would close amongst these candles there, and it would have been a winning trade on this example. Same for this one as well. You would enter your trade on the previous candle, with these 2 candles being the ones you're aiming as a target for the profits, and again here, and again here, and again here. The thing we're mainly looking for is the cross to happen. Once you see the cross happening, the second stochastic has to be at the bottom again, repeating it again. Stochastic has to be at the bottom. This one, the short stochastic, has to be at the top and crossing, and you open a lower trade. So we're going to go lower. Enter, of course, the amounts. Make sure the expiration you're choosing is correct to be in the time frame of your trade, and hopefully you'll have lots of successful trades with this. Now, it's more or less the exact opposite when we're going to trade higher. We are looking to find the comma, the market trending above the comma, as it is here. There's the comma line. Market is trading above the comma, touching it, pulling back off it again. So this is a signal that the market is in an uptrend. That's the usage of the comma. That's why we have it. And then we're looking now at the stochastics. First, the small one. We want to see it crossing over on the 0 line this time, down here. So the market is trending upwards. It pullbacks. The stochastic here, the light one, is showing us that the pullback has ended, and it's going to go back up into the main trend. Here again, right? Same thing. The market was trending back up again, pulled back, end of the pullback, it's going to start going up. This time it didn't go straight up out of the way. It pulled back in the middle again, so we have a second pullback very shortly after. Both ones could have been possible to taken as a signal for a buy trade, and easy, simple stuff. We're just looking for the moment that the trend ends, the pullback ends, and the market goes back into the main trend. This is what these indicators are doing for us in simple terms. Once again, when the purple stochastic hits overbought, as we see at the bottom now, the opposite of before. Before the stochastic was at the bottom side, now it's on the top side. This is the signal we're getting from the purple one, that the main trend is getting to the upper side, to the overbought side, and then the switch over happens, the pullback ends, and the market lifts. This is where we'd enter our trade once we see the crossover, and these 2 next candles are the candles that will be our trading candles. Our trade will be placed already, and this shows here basically the movement where we expect the market to be at the end. So if I open my trade, for example, anywhere along this candle, the trade will end somewhere up here, somewhere along there, anywhere, basically. Anywhere, it would be a winning trade in these examples. Simple, easy stuff. If you do have questions, guys, send them over on the chat. My moderators are watching this, so they can answer some questions right now. And I will be doing a Q&A at the end as well, just to let you guys know, so you can fire me your questions at the end. I'm trying to get to the end of this as fast as I can, so we will have time for Q&As as well. And of course, this is YouTube, so you can watch this video many times over, pause it, understand it, make screenshots, and hopefully this will be very, very helpful. All right, guys, let's move it along. When the yellow stochastic hits oversold, the pullback from the main trend has just finished, as I explained before. Once it hits the bottom here, this is the mini trend, this is the pullback in here. Let me just highlight it as well. So there, for example, it's not correct. Look at the green tick marks and the red crosses. The red crosses, it's overbought, right? We're looking for the oversold. Down here, it's oversold. This is overbought. So oversold, oversold, oversold. What does the comma show? Comma shows the main trend is up. What does the second one show? Second one shows that the main trend is an upward trend. So that's getting overbought on the long term. So long term, the market is bullish. It's going upwards. Short term, there's a little pullback. Once we see that it reached the zero line and crosses, that means the pullback has ended, and now the market should hopefully go back into the main upward trend. So that's the moment we're looking for, to get in with that moment, identify the cross, have a 2 candlestick expiration of our trade, and hopefully have a big success rate. I'm not telling anyone this is going to be 100%. Do not expect to get 100% accuracy on all your trades after. If you do, then you are a trading god, and you should go around the world signing autographs. But you should realistically have a better success rate. If you're doing 10 trades now without a good setup, and you're, let's say, winning 4, losing 6, winning 5, losing 5, that's not really making you any profits. But if you do use a good setup and you're getting good with the indicator, hopefully you can start pulling it in your favor. 6 winning, 4 losing, then you'll move up to 7 and 3, 8 and 2, maybe even 9 and 1. You are going to have the occasional losing trade, but the idea is if you're getting big success with 8 out of 10 successful trades, you are where you want to be. You're making money, and that's where every trader wants to be, with a good indicator setup, making money. Right, let's move it along. What do we have now? This is the possible entries for the higher, as I already previously mentioned. These ones in the little gap here. Once it hits the bottom side, that's what we're looking for. And as you can see here, the little mascots of IQ are showing us that it is now time to go to the live accounts and show some live trading. That's not the side. This is, there it is. Here we go. Live account, and I will be showing you first and foremost some examples I found a bit earlier here. Exactly what we saw before. This is the moment I was mentioning. I have these ones ready already. In fact, you know what? Before we get to this, I'm going to show you first how to implement these indicators. So we're going to come to our indicators here. I have them already pre-added in here, and I made a template for myself, but I'm going to show you guys how to do it. So we come here on the search, and we just type in KA, will show us comma, and we're just going to implement it straight as it is. And yeah, it will come in straight. Let me just actually remove what I have already implemented. And there it is. We just take it as it comes. Color to coordinate. I can make it purple to be matching with the second indicator I'm going to have down here. There it is, showing me now in this time. For example, you guys should be understanding that comma is above the market. So this is showing me already that the market is in a downtrend. Second one I'm going to go to is again back here. And let me just remove the ones I have implemented here already. So I'm going to go to and we go, Stochastic Oscillator, come to the period K, take it away, and I'm going to put 21 on this one. The smoothing, as we said, is going to be 6, and then the period K is going to be 6 as well. I'm going to come to the color coordinate, click here, make it purple, click here, make it purple. Okay, apply. There it is, easy as can be. Come again to my indicators. Let me just put that comma in as well, just to show. Comma, there it is. Let's do that on purple as well. It's fine as it is there. Let's make it thicker as well, and apply, and then come back to my indicators again, and I'm going to go to STO. Where is it? Popular Stochastic Oscillator is in the popular. You can write the full name. I'm a bit of a geek and I want to do it fast as I can to save time. So coming back here, putting this on 4, putting this on 2, not 23, 2, and putting this on 2 as well. So there we go. 4, 2, 2. Color coordinates. What color we said? Yellow and yellow. You can do it any color you want. I just find these are very nice and vibrant colors, so it looks really, really nice. Once you have it, this is what's going to look like. You can have it this way around or the other way around. I prefer it the other way around, to be honest with you. So you can just invert them over. Have that one first and then put the second one in. Once you have the indicators you want and you have the setup, a good little thing to do is come here. You go to added, save indicator template. You click on it, you type in a name, whatever you like. For this one you could write, for example, comma plus 2 STOs or 2 stock, and that's it. You have it saved as a template, locked in for you. I have it already pre-done. I have them as a template here. So let me just show you one I've made earlier, as the cookery shows like to say. I come to my templates. I can see here all the templates I have. 1, 2 stocks. There it is. There I have it set up already. And then another little trick we can do, come to the multi-chart, open it up. I have my 4 favorite assets here. So I'll open a multi-chart, set up my money management. If I'm using money management, enter the amount for my next trade to be identical on all my assets. Make sure the expiration is the same on all the assets I'll be following. Have my indicators implemented correctly on all of them. And this way I'm monitoring not 1, but 4 assets at the same time, speeding up the process of my trading. If I'm limited to an hour or 2 of trading, this way I will be able to make more trades and get to my goal, my target a lot faster. Right, so let me take you now to the Euro USD for the ones I did have some examples available for you here. Hope I didn't lose them. What happened here? Where are my graphic tools? Did I put some lines in? I did put some lines in. Where is it? I had some examples. What happened to them? Alright, looks like I lost my examples, guys. Anyway, we'll find some new. As we can see, examples now on the fly with our preparation. Here, for example, the market is in a downtrend. Gamma shows it to us. A market is dropping. At this point here, it is way oversold, right? Market is pulling up. This is a very nice example at this point here, right? So it's getting oversold. Market is in a peak. There's a pullback I can see here. There's a cross pointing out the pullback has ended. Would have been nicer if it was higher up, but it still works. Again, here as well, this is a nicer example. It is showing oversold, meaning that the market should be in a downtrend. It is in a downtrend, it's trading under the comma, and there's a pullback happening here on the market. Let me just highlight it for you guys as well. So this is the pullback here. We can see it peaks here as well, crosses over, pointing down, and that's the movement that happens. It is 1 minute candles we're looking at here. So if we opened our trade just when we saw the crossover would be around here, as you can see, there's the crossover. So in there is the cross, 1 candle, 2 candle, this candle closes around here. It went all the way down to there as well. So hopefully this would have been a nice winning trade in that channel there. Let me see if I can find an example on the other side as well. Has to be above the comma. For we're looking for overbought at this period here is a good moment to look for. Comma on the overbought, the stochastic second long one on the overbought, showing that the prevailing trend is an upward trend. Then we want to see the pullbacks downwards again. So where is that? Market is peaking. There's a little pullback in here. This is a good moment. Would have been nice if this happened a bit lower, but we do understand that it is trending upwards. So once we see the cross in here, around this candle, we should hopefully open the trade, catch this lovely big 1 minute candle going up here, and our trade would end anywhere between these candles up here at the peak, meaning it's another winning nice moment. Same goes up here again. There's a pullback. Again, it doesn't really show a low point. This is all right here. It does go pretty low. Again, what we want to see is the opposites. This one to be high, above the comma of the chart, and then a pullback back in the opposite direction to launch back up. Let's see if there's anything going on the live here. Straight away I can see where first step is to look at the market. What is going on? It is downtrend, right? Market is underneath the comma. So I should be looking for trades, the market trending downwards and looking for the pullback of it. Problem for me now is that the main trend, as I can see, is trending downwards, coming towards the 0 line. You can see it here. Yep, let me just zoom it in a bit more. So yeah, you can see it's coming down to the red line here. That is what we are seeing, that oversold the long trend, downtrend on the long term, but the mini trend is still in that direction as well. So we could expect that it's going to drop a bit more before it does start doing a pullback. Once it does do a pullback, we're going to see it hopefully coming up to the green line. Once it crosses, once the 2 yellows cross up here with the purple line still hovering at the bottom down there, right? That's what's important, the green or purple to be hovering here, the yellow to be crossing somewhere close to the green line, and I'm going to be ready to go for a sell trade with around a minute and 30 seconds is good, because I want to do 2 candles, right? It's 1 minute each candle, so I want to do 2, so I'll basically be ready here with anything over 1 minute 30. So we have to wait. This one's not ready. GBP USD, this one again, it's on the bottom here, way on the bottom on the oversold side. This is very similar to the Euro USD right now, the GBP USD, starting a pullback. So once we do have the pullback, it's going to be up here, and then we'll be ready to go. We might get lucky and catch a moment, hopefully in a few minutes. Timer is at 25 minutes. I want to keep this pretty short, so we might get unlucky and not able to put a trade in this time. This one is looking okay. Euro GBP is looking okay. This is overbought on the purple. Not really oversold yet on the yellow. As we can see here, this moment was very nice. It's climbing up, not really at the peak yet. So nothing really clear on this example. At this point, it's on the upper side pulling down. So we are starting again. USD JPY, we're starting a pullback at this moment coming down. Okay. Trading, which time frame is good? Well, again, this is up to preference. I have it on 1 minute candles, and I'm doing 1.5 minute to 2 minute expirations. If you like trading, for example, on 30-second candles, then you'll be doing 1 minute trading. It's all best set up for individuals. If you like 1 minute trading, be on this one. Actually, this looks pretty good here, and we need to do 1 minute trading on this because we want to do 2 candles. So once I have a cross here, it would be a go signal to go. I personally prefer doing the 1 minute trading on this approach. So I'm going to have my candles on 1, and I'm doing 1.5 minute to 2 minute trades, plus the 30 seconds will give me my 2 candles. So I wanted to see a cross on this one, answering a question there from Sadiq. Right, guys. I'm going to wait a couple more moments to see if we can get anything in here. We do get a moment to place a trade in. This is looking quite promising. This is overbought on the long stochastic. This is looking oversold on the pullback. So this is the pullback I can see on the market now. Crossing the comma, which is nice. Starting to pull back. So I want to see a cross of the 2 stochastic oscillators. If I do see a cross, I'll be ready with my trigger finger to place my trade on a high. My money management is locked in. I always trade with 2% on my balance, so 2% of my account is the $74, and it's touching. Let's see, let's get ready. They might get an opportunity here for a trade. It's close to the time I want to trade. It is the 2 candle look. If it comes much lower than 1 minute, I might have to bail out of it and do an extension to a 1 more minute here. Let's see if it does work for me nicely to enter something here. You can hopefully see this, guys. We want to see the cross of these 2. And it's fumbling around. Let's see. This is a nice little pullback we're having here on the major trend. The major trend started more or less from this moment coming upwards. There was a little pullback here. A nice pullback, what we're looking at this moment. So hopefully this little cross will happen and show us when the market is going into the main trend. So I'm going to put another minute on here. And I want to see that cross on the bottom. It won't let me zoom in anymore, so this is as close as I can get it for you guys to see. I don't see the moment yet, and my time is running out because I want to do some Q&As still. Ugh, not looking like it, guys. I want to place a trade for you, but I don't want to be overdoing it with my money. So let's give it a couple more seconds to see if we do get a crossover here. And it's right bang on the line, starting to pull away slightly. What do you guys think? I see laughing faces. I hope you're not laughing at me. I hope you're laughing with me. This is tempting. I don't want to risk it, guys. I don't want to risk it because it's not really giving me a clear upward yet. And if you did watch our previous webinars with candlestick patterns, this more or less right now is forming a reverse hammer, and that's not the best thing to trade on or upwards with if this is closing in 15 seconds as a reverse hammer. And I need to put another minute on it. Let's see. Not crossing yet. They're more or less holding hands together. Don't trade. Someone's advising me not to trade. Don't trade. Don't look good for a buy. Okay. All right. I like that comment there. If you are right, there you go. Look, it is still dropping. So I think we have a new host that is doing a better job than I am. I was really tempted to go for it there just to show it. But as you can see, it isn't crossing. They're just holding hands. This one is now pointing downwards as well. I believe it is going to be a pullback. We can confirm that with many different ways. One of my favorite ways to confirm it is by using a Fibonacci extension or retracement, sorry. Take the trend from there, pull it up to here. I can see right now from the beginning of the trend to where it is, it has pulled back to 50% already. That is a good pullback moment. The cross should possibly be happening now, and that would allow me to enter with this backing me up as well. Support resistances could help me too. Finding a support line up there, taking a line, a trend line, taking a horizontal, putting it here. This would show me that there is support at this previous level there, even nicer support at this point here. So there's lots of different techniques. We have videos on all of this, so if you guys have not watched these videos, definitely go and watch those videos. I love how you guys are helping me here. Some are saying don't trade, others are saying trade. I'm going to take the advice of the first one and my own gut feeling and not place a trade because it's still dropping. This one's already changing direction, so that was not really that optimal. I'm backing out of it. I'm not doing it. Oh, someone here knows how to trade very well. There is going to be a poll coming up, if it hasn't came up already, asking if you guys what experience you have. If you are new to trading, if you are long-term traders, more than a year, please do answer that so we understand better of what audience we're reaching out to and what you want to see next, whether it's strategies, indicators, live trading. Let us know, please, so we can make better videos for you guys. And once again, like I always say, if you find it useful, if you like something in these videos, if you find them educational, like the video, please. It helps us a lot. Subscribe to the channel so you can be notified so you can have access to all the previous videos we have created. And then just ring the little notification bell. Let me just put it up here one more time. The notification bell, when you click that, you'll be notified when we'll have upcoming videos. We are having Hindi videos coming up soon. We are having Indonesian videos coming up. Actually, tomorrow we're having our first Indonesian webinar, and we have Malaysian webinars, Thai webinars. Let us know what else you want. If there's any other language, Arabic, we do have Arabic webinars as well when Abed is doing those webinars too. So we have many languages. Let us know in the chat. Write a comment under the video as well what else you want to see. Okay, let's go back to the presentation now. Unfortunately, this time I'm going to spare myself the embarrassment of losing a trade because that's what's been going on for the last couple of webinars, losing a trade every time, as my regular audience may have known already. And let's go on. Last slide I have is a beautiful design. This looks like Hollywood, doesn't it? Whoever made this deserves an Oscar, I think, for graphic effects. And it's writing here that we have Q&A. That means that we're going to be answering some questions from the chat here. Let's see. Questions, guys. Are there any questions on the screen here? It's below the comma. George wrote at this point above there. Call option. Yeah, take. Okay, Nasir is writing, I should have taken that trade. Well, I see a comment underneath, 61.8 is more appropriate. I'm a bit worried about it. When I'm using the Fibonacci's, if it does come down to the 61.8 or even maybe down to the 100, for me, anytime it passes the 50, I'm getting nervous thinking, this might be a reversal, going for a full reverse. If you are not understanding what I'm talking about, we do have 2 videos on Fibonacci. One of my favorite indicators that we can use, a graphic tool that is brilliant. So definitely do watch those videos if you do want to learn the Fibonacci's. It is a tool that I believe any experienced trader has in his arsenal. Support resistance lines, Fibonacci lines, and of course a very good strong money management. Okay, I think there is a poll going on right now. What do you want to see next? Whether it's strategies, indicators, forex trading strategies, anything. Let us know, guys. Let us know there. Okay, please, with this video be able after the new rewatch of, you can watch these videos as many times as you want. As soon as this goes off from the live stream, it will be available on YouTube, so you can go back, watch it as many times as you like to understand something. If I spoke a bit too fast and you missed it, you can always rewatch this many times, guys. And we had a bit of a milestone this week. We have reached 10,000 subscribers on our educational channel. So thank you all very much for subscribing and bringing us to this little milestone. To commemorate this, we're going to have a nice little giveaway on the next webinar in 2 Fridays. So if you are going to be, not Friday, Thursday, not the next Thursday, the one after. So sign up for that webinar, click the notification bell to be notified, and join me for a giveaway where you can hopefully win a nice little prize on that webinar as well. And I'm not sure if there was the poll yet. We are coming very close to the end of this webinar, so hopefully there was the poll that asks if you are experienced or not. For any beginners out there who are new to trading and maybe don't even have a trading account, there is a link in this description of this video underneath where there's an account where you can create your own IQOption account. It's absolutely free, very easy to make your account, and upon making your account, you will start your trading on a practice account if you like, with $10,000 digital money that is not in risk. If you lose it, you can just replenish it. It's no one's going to call you, say, hey, you owe us any money. It's a free account where you can practice your trading. Once you get good with your trading, you can start on your real account, fund it, and begin hopefully with the Double Stochastic Oscillator to make profits for yourselves. So link in the description below to sign up for your account, absolutely free of charge. Okay, I'm going to answer one more question. It's going to be a fast one as well, because I don't want this video to drag on, as I always do by over talking it. Let me see. So do you even provide signals? Oh, Manish, good question. And the answer to that is no. Signal providing is something extremely difficult, in my opinion, when it comes to it. And this is solely my opinion here, guys. The technology today is great, but you need to have fantastic technology and direct live communication. Now, if I was to be looking to trade with another person who is better than I am at trading, I would be doing it together with this person, hopefully sitting in a same room together with a very, very good internet, sitting next to each other, communicating together, and agreeing that, oh yeah, now's a good moment, there's a crossover, now's the moment to place our trade in, and doing it together. Alternatively, if you have amazingly good internet and the other person has very good internet as well, live one-on-one in your countries or in your homes, but again, live communication. Anything with a lag is dodgy, it's dangerous, because if we're doing binary trading as well, you guys know how the markets move very fast. So if I'm going to place a trade in and try to tell you guys as well, hey guys, let's place a trade right now. If there's a 2-second lag in that message coming from me to you, and 2-3 seconds later you place the trade in, 3 seconds in binary trading is a lifetime. I might win my trade, you might lose your trade. So whenever looking for anything like a signal provider or trading with another, make 100% sure you're talking with a person who is genuinely experienced in trading and not someone trying to trick you or scam you or anything like that. So make sure it's a viable source who you're talking with. You have to trust this person very, very much. Test this person's knowledge and skill, and only after multiple sessions together, then possibly consider your own investments to be risked in this. Hope that is helpful. I see one of my moderators has put a link here in the chat as well for the creation of the account with the 10,000 demo. Go ahead and make an account there if you like. Don't forget the giveaway next webinar coming up from now. And I think that's it, guys. I hope you enjoyed this. Did I do what I should have done? And now I remember to go to the full cam and show my full face, but I will end the video on my full cam. I hope you found this useful, guys. Rewatch this video if you like, share it with friends, like, subscribe, and all the good stuff mentioned. And I'll be back in a couple of weeks with another lovely webinar for you. Hopefully you will enjoy it and like it. Let us know what you like as well in the comments. Anything you like, put it in the comments. And I think that's it, guys. Have a wonderful day, have a great weekend coming up, and lots of good luck for your trading. Take care. Bye.